Viewers, this is Raj Khanna with human years of experience, banking and finance background. So previously worked Goldman Sachs, the Redshift Bank, and among other large financial companies. So I'm here today with Raj. We're located currently in Kingston, Jamaica, the beautiful island of Jamaica, you can see from the backdrop and the surroundings here. So Raj, appreciate the time again. What we'd like to do is start, I know we spoke a lot about valuations in terms of, equities and land. If you could just touch and provide the viewers a little bit in terms of your thought process into that and give some clarification about that.
Yeah, so thank you, Jewel. I think instead of sort of Raj, show you this, that, the other, I think sort of jargon reducing basic intuitive stuff is what the industry owes people, because energetically everyone can kind of feel when the rhythm is off. And I'm just a fan of demystifying stuff, whatever it might be, whichever industry it might be. So I think in finance, you make it all super off the head. And other word, everyone's none of it is. It's largely intuitive. You don't have a finance person to you think it's all, you're sitting at nature, this is nature hacking, they've done it, they've already got experiments done on that. What's land? Land at the end of the day is a certain supply of something that everybody wants or needs. So it has an attack of that, so everyone can relate to that. Now that via the Golden Triangle and Kingston, the Golden Triangle is your tier 1 property of biggest city in this country, and hence it would be the last to fall, also the first to rise. And the most maybe, this is where the house lists are, this is where the office spaces are, this is where premium residential is hopefully even, and it's unlikely next door, but these green spaces. So if you have this land over here, if you're going to have somebody say, well, I want to buy this land to make my dream house, no matter who they are, they're going to have a certain ability to pay and a certain amount that they want to pay for that land. Doesn't matter what the acre the price is. When you think at a developer saying, well, I want a property, and so wait 5 years for me. Luxury tower or something, because of when for this certain kind of corporate hotels with a shortage, definitely it is that entity, that person is going to be able to stay a lot more reasonably than somebody who's just looking to build a house. But that creates a difference of where valuation then becomes the eye of the beholder, where at some level in a reasonable way, valuation can be driven by the eye of the beholder. Who is buying and why they're buying. Now, there used to be reasonableness about it. I'd say used to, because since the technological revolution, we've gotten into this world of 20 times, 50 times revenue and vaults and all these fancy words, man. At the end of the day, if you even look at an operating business, right? Anything. You could make widgets, you could make glass, and you could make watches, you could make shirts. Whatever the revenue number is. Usually the good operating business, 20, 30, 40% margins, which means that you made $100 in revenue, you made $20 in profit or $30 in profit, $40 in profit. That's what your net income margin is. Now let's just keep the maths simple. Say you made $100 in revenue and $20 in profit. That's 20% operating net income margin. For someone to reasonably pay 1 to 2 times revenue, which is $100 to $200, makes sense. Why? Because for an ongoing concern, as is, someone who paid $100 to $200 would recover their money in 5 to 10 years based on the company doing what it's doing and making a profit of $20. Now that seems reasonable when you make money the time. So, okay, that's 1 to 2 times revenue. When you have a company like a Gatorade or a Pepsi or a Nestle or a Coca-Cola or something, they can say, well, I've got this new drink that people like, alkaline water or this kind of coconut water or this energy drink or whatever. You can say, well, this drink has $1 million in revenue. It's got a little community following. Now I can pay $10 million for it, but it's 10 times revenue. Why? Because I can take this drink and certainly one day to the next, put it in all of my trucks that will deliver all over in these markets, whether it's, say, this one state or the next state or nationwide. So I can make this entity is the thing that I bought, its revenues go over 10 times in the next year or two. So really, I still only bought it for 1 or 2 times the revenue, even though I paid 10 times revenue for it today. So that still makes intuitive sense. And that's where you make valuation to things like multiplication of revenue as a form of valuation. If you're a strategic acquirer,
Okay, yeah. So Raj, so touching on that and acquisitions, right? So what we've seen, in different stock market cycles and different equity cycle, we've seen, overvalued regionals, right? So why is that, and what are some of the challenges with that you're seeing in terms of, buying into that, the startups? So, at 10x,
You give me too much credit when you say, why is that? Listen, and not to go with my body language and doing here.
why is that?
Here's what happened. It's a tough question if I want to answer, and I'm happy to answer.
Sure.
And I hope I can answer it without kind of doing this.
Yeah.
Because a pointing finger with three fingers pointing back is, listen, not to make it ageism and all of that stuff. I'm 45 years old. All right. I've been doing this now for over 2 decades. Finance, and have had the opportunity of being both in public finance and private finance and seeing it through M&A and looking at the $3, $4, $5 billion purchases and acquisitions to how to be big short, structurally running, sorting the U.S. housing market as a structural head to being long mining and resources in Americas and other parts of the world with this head under the further than where you realize that sometimes you can have numbers within this valuation. The point is this, there's a lot of tools and a lot of things without, again, sounding like pointing fingers. The surprising human tragedy is how short-term everything is. It's ridiculous, I mean, something moved me this, and I don't really do interviews and all that too. So, and the fact that we had met and we kind of had a little bit of a rhythm, you speak a few languages, you're born in Jamaica, you went to Canada. I'm born in India. I actively chose Canada when I got to the age of 30, realizing the madness of the human condition in a lot of ways, and coming from Asia and having this little window into high finance, and then coming to Canada and see a whole new market come through, which we can touch on later. But when you say, why is it this way? It's because people are too short time. Everything become 1 day, 1 minute, one projecting, one this thing. I have to have everything and I have to have it now. I mean, the journey got lost. The outcome became, it's the end goal. It's no longer the tail. Is it the tail that wags the dog? Is it the dog that wags the tail? It's kind of like the cart got in front of the horse. It's like, wait. And this is where my beauty, that my hairy guy, she says, Raj, where like my hair stands up on this studio. And I hope there's any goodness, and I hope, Jewel, this is like, you can want the day, some are just around path doing 13th, so that will find about 13. This is as a function of having gone to kind of work with the idea of the fact that SMEs change the world, micro, small ones that most they do. Because even today, they employ 90% of all businesses in the world are MSMEs, micro, small, mid-sized businesses, and they employ over 50% of the people in the world. Here's the living tragedy about the whys, like you say in valuation. Why is that? It's all humans behind it, or it's computer. Now the computers, the algorithms are momentum based. So without getting all technical for studying, if over 50% of trading now in the NASDAQ is an algorithm, you say, what the fuck is common? What do you mean code to think about? For our brains are like, well, are we suddenly do this AI word for me, and what does that mean? And does that mean that I got to do this thing that I told you, Joe, which is, don't hate the player, hate the tech. In a business context, we all know, though, that someday, no matter how big, no matter how small, dust to dust, ashes to ashes, we are going to meet our maker. So the journey matters. And what we don't do is become the person about the journey. We project about the journey. We do a lot of hindsight about the journey. Oh, this was hard. What we don't do is allow for saying, look, I have the platform to say this now. I have the platform to say this again. But I can talk to you about being educated until the walls until the cows come home. I can tell you how my own mother promised on my father's deathbed that he must go get this extra degree and all of this stuff because, that's what you do. But
yeah. So the confounding impact, but also, the valuation advocacy to it, annexing, something that is valued at, probably five times earning as an example, right? So we've just compounded something got overvalued, and it can also work in the reverse of that.
So the overvaluation happens because there are good people who are saying, I'll come along for the ride.
Yes.
I'll have 20% share this company. I'll be a retail investor. Just don't lie. If the profit number is a profit number, the revenue number is real, and the margins are real, and your cost of goods sold is real, and your balance sheet is real, and you don't have off-balance sheet debt, and you haven't sat there and paid the right taxes to the taxman, but support your investors with off-balance sheet stuff that you didn't tell that, then it came out somebody. So I mean, that's all they're asking for. And what it is in the public realm is they can still do stuff, right? I mean, audited financials and all this at the end of the can't come down to here. I remember that one of the big points of this topic was mental scarcity. The scarcity of it.
Yeah, so Raj, appreciate the time and, some of the information and insights that we've discussed so far. For the viewers out there, if you could just, provide a quick introduction into yourself and also, what you do specifically, right? So we know Raj, as the investment aficionado. If you could just, tell the viewers, what was your journey and what your story is, and what are you currently going on from a good standpoint?
So let me give it sort of what I've focused on and sort of the if you kind of look at a risk spectrum from 0 to 100, you've got the market at say 50, the stock market, and then your Google, Apple, Facebook, some of it. Pure gambling, which is what I call 90-100, which would be cryptocurrency, going to the scene on the web. And that's the world of trading. You can stay trade of cryptocurrencies. To me, it's not an investment, but it is certainly in traders' handy store, and that there's enough volatility in that. So that's not my world. But the day two word, plus minus 70, where you've got private equity, growth private equity, private companies where you have to go in there, create more value, partner with them and grow that. That's what I've been doing for the last 7-8 years. I started Grow Capital Group really as a movement around that. Legally and regulatory wise, it's a partnership with Canada. It's created an investment partnership here in Jamaica now. And I'll get into why Jamaica I stumbled upon as a way that is really great to solidify what I believe in, which is in this world, I'm obsessed with saying, how do I take 1 to 20 million revenue companies and hence their valuations, which is $20 to $50 billion in painful ways, and turn that into a buyback 5 times, but be cogent, reasonably valued, cash flow generating, like in companies that are valued at that are employing good number of people and that are not playing what I call these paper things, the stock market and valuation, where you don't have to justify 50, 100 times revenue and all this stuff because you're going to roll onto the world in the future. No, there's a great way to take $2 to $5 million and put it to work in a minority degree or some type of it's okay. You were saying where the heat right at the serial, which I was maybe used to consider that, but something that can be the 1 to 20 million world, where you can take 2 to 5 million and then another 5 to 15 million based on other partners in syndication collaboration. And there's enough space for everybody to grow into nice big cap companies. So and that's the world I love. The point is, yes, we financed over $20 billion of public works by linking in insurance companies, what you call asset liability book, which is what happens in a life. You live, you don't know exactly how long you're going to live. And then you have kids, you have this, it's Father's Day. You worry about your children and education and what have you, so you have longevity. And again, back to money and time. So keep an open mind. Just let experience and the human condition and your experience of it and your sharing of it.
Yes, Raj. So, that information you provided, the insight was really great. So touching back on, what we had discussed, mental scarcity, right? What does that mean to you? And how did that lives, for greater opportunities? Yeah.
I mean, rather than greater opportunities, it's more like, where is the scarcity? I think technology is doing this to it. I don't want to sound like a Luddite, but it's like the joke's reference. The joke is, we're so helpful days. We're so less journeyed focused, and everything then gets reduced. It gets reduced to, let me project, because of course I should have everything now, because how else can I have a ride? Well, guess what? You didn't get the memo that everybody knows and feels that you've arrived when you just release smile and you just release from the dis-ease of being. Because no matter how much you have or not, and listen, I'm not showing you any 8-bedroom houses with private jets and Ferraris, but the $1,000 dinners and all of that and blah, 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 and this chef and that stuff, sure. And look, the point is, it's who you are you wired. Pick your favorite thing. Pick the most favorite thing you like. I mean, it's mango season. I love mangoes. You know, you eat your mango, you eat the first mango, boy, it's lovely. You have a Bombay mango, they say, wow. You know, it's nice and chilled, amazing. But you have the 10th one, it's not as sweet as the first one. Now, we all know that. The point is, you can look at anybody with any lifestyle and say, well, $1 million a month, $20 million a year. You still don't need more than $200 million of net worth. You don't need to be a billionaire. Now, that's nothing against a billionaire. And this is the point. People go towards cryptocurrency. Bitcoin's now 70,000, blah, blah, blah. Maybe look, what is money? Money is a system of barter. What is blockchain? A block of time of transactions based on a coin toss. Whichever computer can do it faster.
We spoke about mental scarcity. We spoke about valuation. You know, we also spoke about the energy of money, essential, right? Because money is an energy. So it flows, you know, as my friend Bruce says, be like water, my friend, right? You put water in a cup, it becomes a cup. You put water in the stream, and it becomes the stream, right? So be like water, right? And what is that in you? Money is like water, you float, right? And it can sense energy as we said, right? So either it follows or it's us, right? If people do want to reach out to you or connect with you, what's the best way? So that's fine.
I mean, look, feature outro, like I said, I'm somebody who stays in my lane, the wing. I think, of course, went up with this. Watch, say, first 7% the year on clipping, as I call it. Pull my money on anytime I can get the tether on a monthly basis myself on other and money. So I see that business growing. And to me, what I see here, looking at the target financing space, so really business financing, not micro lending or individual loans, but really financing with purchase order and accounts receivable to businesses with that create credit flow in the economy, things that can actually help the economy. So to me, microfinance, but genuine microfinance, which means, an interest rate that is also reasonable. It's not hint, 80, 100% a year, but just be a complementable, be collaborative, be in this lane of 30 to 40, 50% a year, where people take loans for 3-4 months kind of thing. So I see a lot of positivity where I can look at 20, 30, 40, $50 million companies here.
If you were, an investor, what would you have become?
That's a no-brainer, don't break my heart, lift it. Because it's Father's Day, but that might be maybe a 1-second clip that one of my best friend's father took on a camcorder in the 90s.
Okay.
Where I saw my legs move and I had a very long stride.
All right.
So it's, I don't like the movie Chariots of Fire. I felt the energies,
Yeah, video energy.
But I ended up named Swashin.
All right.
Might happen at this watchway India. So I would have done that, and I would have probably maybe I could still do what I've not to be a character. So not like these were more the just more the something that gives a little insight into the human condition. It just makes you be like, it's like Dad said. I'll leave you with this for the Father's Day. It's I don't know who said he said people with skeletons in their closets, she can fit all more than others. And I think that applies goes on, and that stay humble to everyone. Stay empathetic. That's know that nobody's perfect. Everyone's working with a given position. And as he would always say, we all use signals be green. So we all use signals like in a stoplight. We all use signals be green, and your path be clear. Lord be that clear.
Giant.
And man, be like water, as he said.
Yeah, man. Be like water. So, Raj, appreciate the time. And viewers, if you want to connect with Raj, there's going to be a link down below.
GrowCapitalGroup.com is the website. Yeah. It actually goes to GrowCapital.net, so they had both, but Grow Capital Group is the legal entity of the movement. The LinkedIn profile he'll have in there, but really that'll have everything, email, all of that, LinkedIn profile. So just GrowCapitalGroup.com.
All right, sounds good. So we'll end it off. Namaste.